All right, let's get right into this. So, picture this. It's the day after Thanksgiving. Most of America is still dealing with a turkey hangover. And while all that's happening, the very engine room of the global financial markets just quietly sputters out. Now, on the surface, it was a glitch, sure, but it was a glitch that ended up revealing some deep, kind of unsettling truths about the whole system we all depend on.
Someone pulling the plug on the COMEX. I mean, that's a pretty blunt take, right? It came from a veteran trader who was watching this all unfold in real time. COMEX, by the way, is the main place where metals futures are traded. And while it sounds a little conspiratorial, that quote just perfectly captures the shock that was ripping through the markets. You have to ask, why would a simple technical problem feel so much like somebody deliberately shut things down?
Okay, so the timing here is absolutely key. Precious metals were having an incredible day. Silver, in particular, was hitting all-time highs. Everything's looking great. Then, at 10 p.m. Central Time, bam! The CME Globex platform, which is basically the electronic heart of all global trading, it just goes dark. And in the minutes right after, the price of silver in the other markets that were still open completely craters, erasing every single gain it had made. It's a classic mystery setup, right? A market's flying high, the main exchange suddenly goes offline, and the price just collapses. What on earth happened?
To really get the impact, you've got to appreciate the scale of this thing. This wasn't just, one little market having a bad day. This was the world's financial engine sputtering to a dead stop.
The scope here was just massive. We're not just talking about gold. We're talking about a halt across commodities like oil, government debt like Treasuries, and even stock futures. And this all happened during the early Asian trading hours, so the entire flow of global capital just stopped. This platform, Globex, it's like the central nervous system for figuring out prices all over the world. When it goes down, the entire world is flying blind.
So of course, the exchange had to give an explanation. And well, the one they offered was very straightforward, almost a little too simple.
The official cause? A cooling issue. Yeah, you heard that right. CME Group said that a problem with the cooling systems at one of their data centers forced them to shut down the whole shebang. It sounds so mundane, doesn't it? An air conditioner breaks, a server gets too hot. In most businesses, that's a pain. In this business, it's a global financial event.
And that is the real question we're digging into today. Because when you look just a little bit closer, this so-called simple glitch starts to look like something much, much bigger. So let's explore two different ways to look at what this event really meant.
All right, so our first take on this whole thing frames it as a strategic blow. This is all about how a simple technical problem can become a huge opportunity in a much larger geopolitical fight for who controls the world's money. See, you have to understand these big exchanges are in a constant, high-stakes battle to be the place where the world sets its prices. For decades, Western exchanges like the CME Group have been the undisputed kings of the hill. But that's changing, and it's changing fast. Competitors, especially the Shanghai Futures Exchange, are gaining ground like you wouldn't believe. They are ambitious, they're expanding, and they absolutely want to be the new center of the financial universe.
And in that context, the damage from an outage like this is huge. For a global price setter, reliability is everything. It's your entire brand. An outage like this exposes a critical vulnerability. It damages the CME's reputation, and it feeds this growing narrative that the Western financial system is old and fragile. For rivals in the East, this is like an open invitation to say, hey, see, their system breaks. Come trade with us, we're the future. And this all happened right after other signs of stress had already appeared in Western metals markets. The timing couldn't have been worse.
Okay, let's pivot to our second take. This one is less about geopolitics and more about the actual mechanics of the market. It argues the outage didn't just cause a crash, it actually revealed a deep, fundamental flaw in the very plumbing of the global metals market. Okay, to really get this, you need to know there are basically two main places where metals are traded. First, you've got the futures market, like the CME. That's where most of the big speculative debts, the buying comes from. And then you've got the spot, or over-the-counter market. That's where the actual physical metal and commercial deals happen, usually directly between two parties instead of on a public exchange. Now, in a healthy, functioning market, these two are always connected. The best way to think about it is like a bridge. The speculative buying flow comes in on one side of the river, and the commercial selling flow comes in on the other. And the big banks and financial firms, they act as the bridge itself, connecting the two flows. This is what keeps prices stable and orderly. And that is the exact question that this whole incident answered for us in the most dramatic way possible. What happens when one entire side of that financial bridge just vanishes into thin air?
Well, this is what you get. The second the CME Globex platform, the futures market, went offline, the price in the spot market just fell off a cliff. The bridge was gone, and the market plunged right into the river.
So here's exactly how that worked. With the futures market totally offline, that buying leg of the bridge completely disappeared. All that speculative energy just vanished. But, and this is the important part, the selling pressure over in the spot market didn't stop. It just kept coming. But now, there was nobody on the other side of that bridge to buy what they were selling. With a ton of sellers and no buyers, the price had only one direction to go, down. And it went down fast.
So, a cooling failure, a strategic hit, a broken bridge, what does it all really mean? Let's zoom out for a second and look at why this one really strange night in the markets actually matters to everyone.
So, what's the big takeaway here? Well, this whole outage acted like an unexpected stress test on the system, and it revealed some really serious cracks. It showed that our global financial plumbing is way more fragile than we like to think. It proved that a single point of failure can literally shatter one global market into a bunch of separate, isolated, and totally dysfunctional islands. And maybe most importantly, it was a real-time, textbook example of deglobalization in action, a huge warning sign that the era of a single, unified financial world might just be ending.
And that's the thought I really want to leave you with. Was this just a rare, random accident, a one-off glitch we'll forget about? Or are we looking at the first tremor of a much larger earthquake, one that signals a fundamental shift in how our entire world is connected? Honestly, the answer to that question is going to define the financial world for years to come.